I don't know what to do. I don't know whether to fix it or to leave my rate variable. This is the question that plagues so many investors and homeowners out there, because interest is one of the biggest expenses that we'll have in our lives. There's been some information that's come out in the last couple of days about inflation, and it's definitely going to affect that decision. So we're going to cover that right now. Some people out there might be saying, inflation, what the hell's that got to do with interest rates? Well, firstly, inflation is a measure of the growth of prices of goods and services in the economy. So it's the erosion of the purchasing power of our dollar. Not much of it isn't a good thing, and too much of it is a good thing. We want to be set somewhere between 2 and 3% is where most economists agree that should be. So what the Reserve Bank is able to do is, if the inflation figures are low, then what that means, the economy is starting to cool. And so what they can do is reduce interest rates to encourage spending out there in the economy and actually stimulate some growth, and then in turn some inflation. If inflation is running really high, then what the Reserve Bank is able to do is raise interest rates, the price of money goes up, business investing, property investing, all other things comes down, the growth slows, and then inflation comes in line to that 2 to 3%. What we've seen come out in the last couple of days is the figures on inflation. And for the last quarter, in terms of CPI, that's the Consumer Price Index, it's been stagnant, in zero. It's only, the economy in terms of inflation has only been 1.3% since this time last year. So when we think about interest rates, obviously when we're below that 2 to 3% target, the Reserve Bank, among other things, it is one of the main ones though, has pressure to lower interest rates to stimulate the economy. So what we're going to see, potentially in the first week of May, some economists are calling for a rate reduction of 0.25% at that point in time. Now that may be a little bit too soon, because the Reserve Bank's probably going to understand that that's a bit muted around the election, because it's not going to have the direct impact that it's wanted to have. But what it is doing is building more and more evidence that the Reserve Bank needs to make that reduction at some point during this year, probably in a couple of months' time. Now, because of those inflation figures coming out, those of you out there that are thinking about fixing a rate or going variable, these are the two things that are going to happen. If you're on variable, it's likely that at some point in the next few months, you're going to get a rate reduction, probably 0.25% at some point. Maybe that's done through 2 small adjustments over 2 months. But the other thing, if you're in a fixed arrangement, because again, this is another indicator that rates are going to be that inflation is staying low, and that the Reserve Bank has less reason to raise rates in the short to medium term, what you're going to see is lenders are going to be more bold with offering their fixed rate terms. So that when you're looking at a 2 or 3 year term, you might actually, over the coming weeks, actually see better offers than what you've seen over the last couple of months and that type of thing, because it's all indicators are saying that the rates are going down. And a fixed rate is the bank effectively hedging and making a bet on which way the rates are going to go. And so I think anyone out there that's in variable, keep an eye on those fixed rates and see once they start dropping, and you may be able to cash in and save yourself some money. Anyone who's got any questions about that sort of thing, please leave a comment in the comment down below, and I'll try and answer it as best that I can. And also too, anyone that's wanting to find out more than that, please, there's also a link down below to our investment, property and finance masterclasses. We've got 26 of them coming up around Australia, which is a live event. It's free, catered, and 2 hours of powerful property and finance information suitable to the first time investor all the way through to the most advanced. So if you're into this type of thing, would like to know more, whether you're thinking about getting into property or you've got an established portfolio, click the links, register yourself. It's all free, and there's nothing to buy on the night. There's no courses to sign up. It's from us at First National Investments and Projects, putting on an event. We'd love to see all of you there, but hope that was helpful. Bye for now.